Hello, this is a trade site trade recap using eSignal 12. I wanted to walk you through a trade call that we made on Monday, November 2nd, 2015, just because it highlights the importance of so many levels that most people don't recognize exist in the market when they're trading, and how functional you can really be as a trader once you have these key levels. So here's a look at the GILD, Gilead, on a 5-minute time frame starting. You just see the first candle here of Monday, the 2nd of November. And it's pretty much a flat opening for the session. We started out right where we had closed the prior session. I want to draw your attention to two colored lines here. There's a very short dash red right above the current candle. That's what we call our upper pressure threshold. It's sitting at 109 on the chart for the session. It's going to be a key support or resistance point from either direction every day. And the other one is the longer green line above it, and that's called a static trend line that exists because of some action the prior day that occurred on a move to the downside. And it's not a support or resistance point based on the chart. In other words, it's not the high or low of any range. It's literally just based on a certain energy measurement that we use. But it's a very important area in the market, both on stocks and on futures and on Forex in any time frame. So let's take a look. I'm going to use bar replay mode here. We're going to live through the day one candle at a time, or at least through part of the morning. And what I want to show you is the second candle of the day came up and literally to the penny hit the upper pressure threshold. That's that red line at 109. So now what we've done is we've established that the pressure threshold that we had coming into the day is a key area that the market is recognizing. It stopped right at that number during this 5-minute candle. So what we were looking at is to call a trade to go long the GILD if it broke above the pressure threshold, because once you've established the number that the market should have noticed, which it did in this case, it's very important that if it gets through this, it has a good chance to run. And so you'll notice is that the next candle was kind of sideways. So we just basically sat under that pressure threshold. And then here it is, the next candle, we finally trigger. So we ended the trade just above 109. Now, what's important here is that usually for us on $100+ stock, we're looking for 50 cents or more as a partial, a place to take a piece of the trade off, because it's a $100 stock. You can't be trading around those for 10 cents or 20 cents. You need more than that. So usually we're looking for 50 cents or more. But the reason I put this video together was because you have to also recognize what the market's willing to give you. And in this case, we also know that we have this green static trend line that's in the way, and it's before 109.50. It's actually at 109.40 or so. So what we advised all of our customers was to take a piece of the trade off if it got there up near 109.40 and not wait for 109.50 or 60 or 70 like we usually would, because it's important to get a partial at a logical place so that you can then work the second half of the trade with a bit of a cushion or a comfort zone, if you will. So let's watch how this plays out. I'm going to move forward again. Not much happened in the second candle, but we're still in the trade. I'll move forward again. Again, not much happens there. And now look, as we start to move up, so we've been in the trade now for about 20 minutes. Look what happens. We come up and we exactly hit the 109.40 level, which is that static trend line, such an important level on the chart. So we took a partial off right at that level as it was trading against it. You can see it doing it here now. So we had plenty of time to get out at that area. But what you'll notice is, look at what happens next. Whenever a trade exists, a good, valid trade, you should not be afraid of that trade coming back and retesting where the trigger was, because if it holds it, generally speaking, and turns back up, that second move is usually the better move. So here we are, we triggered, we set the upper pressure threshold that we had coming into the day, which was 109. We bought it when it triggered through that level. We recognized that we needed to take a piece of the trade off by 109.40 instead of going for the 50 or 60 cents that we usually would, because that's where the static trend line was. And now we've rolled over to come back and retest that 109 area, which is now supposed to be a support area because it was a key trigger that worked. And now look at the next curl up, takes us through the static trend line and higher. And again, what's so important about taking that partial? Taking the partial allows us to relax as the stock pulls back to retest the entry point and not panic just because it's rolled over a bit, because we know we've already locked in almost 40 cents on part of the trade. That means it could go back 80 cents the other way before we would be break even. So that makes it real easy to let it test out the area that you want it to test out. And in this case, the next push takes it up. It's about $110. So it's a good trade overall for us. It ended up playing out well, but it's not just about that. It's about the fact that having these key technical levels that most traders don't have in front of them makes it much easier to make money in the markets. Hope you found this useful. If you did, please like us on YouTube. It does help us out. Have a great trial and good weekend.